Hello, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain, with me Saisha Faridi, and for now the market is holding on to the green. It's not a major move, in fact, that we're seeing on the index. It's been very quiet. Okay, actually we're moved into the red just as we speak. So the tug of war really between the bulls and the bears continuing today, while the Bank Nifty mid cap and small cap are holding in the green, and the mid cap outperformance and the broader market outperformance is something which has been the nature of the market of late. That continues, but the texture on the frontline index has become a bit more subdued. In fact, we are below the mark of 24,850. So tracking that, let's quickly take stock as to what really is putting the pressure towards the bear side. It's Reliance, which is actually down 0.5%, and that's adding 15 points on the downside. Infosys is on the back foot right now. SBI, HDFC Bank, these are some of the other losers in the trading session. What holds up okay is a Bharti Airtel. So that's holding out quite okay. ITC, ahead of its numbers tomorrow, is holding up with a gain of 1%. And then there is quite a bit of activity on Asian Pay. It's surprising so, because crude prices have actually spiked. But given the fact, at least over the last 1 month, they have corrected quite a bit, maybe there's some sort of positivity around some of these paint companies as well as the users of crude. Broader markets, a lot of result reactions. Torrent Power, for instance, that big merchant sales spike coming in this quarter, and that's the reason the stock saw a big beat versus expectation, holding on to gains of 17%. But the big question is whether it will sustain or not, because Section 11 on gas utilities is over, and secondly, the peak of the summer demand is also perhaps behind. So that's something to watch out for. You also have BSC doing quite well in the trading session. K Fintech is up. And then the latest numbers coming in from the likes of M&M, Z Entertainment. So some of these stocks are actually reacting to the earnings as well.
Oh yeah, they are. In fact, the commentary from Z has definitely taken the street by surprise, especially the kind of guidance and the turnaround quarter that it's turned out to be. 5.25% higher for Z. M&M, more a case of sell on news kind of a story. While the numbers look okay, but the stock has definitely cooled off from the top. Though still holding out with about almost a 1% gain, but it did see that bit of a sharp slide and now recovered since. Having said that, like Anisha was pointing out, it's pretty much status quo for the index. While we are sitting at the high point of the day, let's see whether we make it to that 25K mark today or not. Asian Paints, Bharti, HDFC Life, JSW Steel, Adani Ports, Hindalco. It's the metals and the energy space which once again is actually holding out. From within the broader end of the market as well, look at Trent. I mean, some stocks completely escape any rationale of valuations. Another fresh high for Trent now. It's at 58.70 as we speak, and I think it's not too long ago that it actually cruised past that 5,000 mark. Granules, Taracom, Jubilant Foodworks, these are all names which are holding out very, very smartly in trade. Let's bring on board Kunal Bothra as well, talk about what he's making of the trade setup so far, what the charts are indicating. Kunal, no reason to complain, I guess?
Yeah, no reasons to complain. I think we are just 40-50 points again away from the 25,000 mark. The only underperformance is from the Bank Nifty front, and I think that's been the sore eye for the markets, because this is one of the major reasons why we're not being able to lift off or get into any kind of a momentum on the indices, because you still see a lot of selling on the large cap private sector banking names. PSU banking stocks, they had a good day a couple of days back, but then post that we've not seen any major follow through price action for the PSU banking names. So I think that's the only sector which is adding to the short term weight for the market. But then overall, the market texture has been very strong. We saw the auto stocks making a strong comeback. Today you've seen many of the specialty chemical names likes of SRF, etc., which have done reasonably well. So there are many other sectors which are balancing out and playing their important role when the overall larger cap weighted sectors are underperforming. Net, the view on the indices that we are consolidating in a 200 point range for the Nifty. 24,800 as a support, 25,000 broadly as a short-term resistance. But I would probably believe that we should break out this 200-point band and move up higher towards 25,500, 25,400 mark at least over the near term.
Okay, point taken. So that's the view coming in on the market right now. From the broader market, what else is buzzing around? CCL products, of course, definitely deserves mention. Ajanta Pharma is the other one, which is second day on the trot, doing quite well, and Granules too. In fact, quickly, Kunal, your view on Ajanta Pharma and Granules India, a couple of these pharma names which are gaining ground on second day as well.
Yeah, this is in fact one of the better weeks for both of these names. Ajanta Pharma just 2 weeks back, Nisha, was at 2,200 levels and the stock is at 2,700 marks. So this is a decent 30% plus, kind of a jump for stock like Ajanta Pharma. And same is the case with, I think, Granules in terms of percentage. The stock is up 15 to 20% in the last 3 to 4 weeks. These are exceptional kind of moves because you don't generally associate these kind of strong up moves and consistent up moves in a short a period of time in these pharma names. But this also indicates that these stocks are coming out of their own patch of multi-month, multi-quarter consolidation. Granules, for example, the stock took a lot of resistance at the 500 mark. There was a point when the stock had fallen below the 400 levels. I think 385 was the low for the stock. But the moment the stock had broken past again above 500 mark, we saw very good recovery for Granules as well. So these are stocks which are making very strong comebacks on the longer term basis, and that's why you see momentum being changed into these names.
Okay. That's that on some of these buzzing stocks, but let's shift focus to the insurance sector on the back of comments coming in from Nitin Gadkari today, who has now urged the finance minister to withdraw the GST, that's the goods and services tax and premiums paid for life and medical insurance, a move that could actually potentially reduce the burden on insurers and would likely also boost product demand for the sector overall. Let me take it across to Anurag Shah, find out what more details he's picking up on this. Anurag?
So demand for reduction of GST on insurance premium has again picked up, and this time Cabinet Minister Nitin Gadkari has returned to Finance Minister Nirmala Sitharaman saying that 18% GST on life insurance, which is term insurance and health insurance, is unfair because it's a protection against the uncertainty, the term insurance, and for life insurance, medical insurance, it's hindering the growth of sector also. Industry bodies also from very long asking for the reduction on GST on health insurance, and couple of times insurance industry has returned to finance ministry that they are ready to pass on if there is any reduction also in GST, because presently the 18% GST is hindering insurance industry a lot, especially on the health side, and for public at large also, especially the senior citizens are suffering a lot because of 18%. If we talk about the data also, so in FY20, overall premium underwritten by general insurer and health insurer was of around 56,000 crore. And in FY24, it has doubled around 1,09,000 crore. So in that same ratio, GST share has also increased from 10,000 crore to around 19,621 crore. But number of policies and number of life covered has not increased in this fold. A number of policies and number of life covered has increased by just 11 to 12%, which is impacting the growth of insurance sector. Presently, the general insurance penetration is only 1% of GDP against the global average of 4%. So that is also hindering the 18% GST is hindering the growth of the overall industry also. If we talk about in ET now has only asked the question to Finance Minister in June GST Council meeting about the reduction on GST on insurance premium. So Nirmala Sitharaman has replied to ET now that Fitment Committee is working on rationalization of GST, and it is likely to be taken up in August GST Council meeting. So now hopes are high because Cabinet Minister Nitin Gadkari has also returned to Finance Minister Nirmala Sitharaman, and if this will have a huge impact on listed companies. New India Assurance, which has a 53% market share from health segment only. Of total business they are doing, 53% is from health. Other player, ICICI Lombard, biggest private insurers, has 32% market, 32% business coming from health segment. The newly listed entrant, Go Digit, has 17% of their total business coming from health, and the Star Health, which is a standalone health insurance company. So all of their business is through health only. So if any reduction in GST for health insurance and term insurance will be a big booster for insurance industry.
Taken. So yes, if it does happen, that could be a big boost to the average consumer and of course all the insurance companies. In fact, of late the insurance companies have been on the better side of the regulatory challenges because a couple of easements have happened, which has made some of these sectors a bit more attractive, and that's the reason some of these stocks are actually at the highest point of the trading session. What we'll do is perhaps listen into the commentary coming in from the India Mart management. That stock is down 6% in the trading session. because despite a big beat when it comes to the margins, there was a miss in terms of subscriber addition, and that really poses a question on the visibility going forward. Listen into what the management had to say to counter that argument.
We have been trying to work out on the churn, and it has been stubborn for us so far. So we are working towards multiple strategies to deal with it. We have the target of going back to our 4,000-5,000, but we are working towards cutting down on the areas which are not profitable and trying to focus on the areas which are profitable. So we should be able to get back on track sooner than later.
Back with closing trades right here in 80 now, holding on quite comfortably, 60 points away from that 25,000 mark. We've just been, around that narrow band, about 50 odd points on an average away from that level. But that said, today, of course, it's HDFC Life, JSW Steel, Asian Paints, NTPC, Bharti. These are your active participants. And from within the broader markets, it's Granules, which has shot up 6.25% post its numbers. Trent holding up to a fresh life high. That stock higher by 4.5%. Jubilant Foods has been looking very strong. And then SRF as well, which is going very, very smart indeed in trade as we speak right now. Let's welcome on board Anand Tandon as well and find out what he's making of the market right now. Anand, I don't know how closely you've been tracking Z, but the management commentary, I think, is something that the street is picking up on. The fact that they've indicated a gradual margin improvement, which they foresee is going to continue, and stating that FY25 margins are going to be better than FY24. Quite the turnaround quarter, though.
Well, obviously, the management says that they are looking at better margins. Market will be taken as a positive. For the most part, the market for the second year in this quarter have not been not grown. In fact, because
we've got you on a very, very poor audio line. We'll just try and reconnect with you. But Z holding up a good 4.5% as we speak right now. They've also said that they aim to deliver industry-leading 18 to 20% EBITDA margin going forward. But Kunal, for the overall market, other than banks, where is it that you're seeing some concentrated weakness?
So I think only the IT stocks and a few larger cap names is the one where in terms of sectors there is mild weakness. But then it is very minute in the larger scheme of things, because what we are looking out for is a much more bigger breakout for large cap IT names. So I think it's a phase of a pause, maybe a mean reversion, some sort of a churn within the sector, which is going on. But I would probably believe that both the sectors, as I mentioned, even the banking index as well as the IT index, over the next 1 week, I would probably believe that they should be coming out with their consolidation, because it's not as if that there is, some very heavy selling which is going on into these sectors. I think it's just a churn which is playing out, that maybe because of the market breadth which is broadened out, some money is moving out from these larger cap names and moving on back towards these mid caps and small caps and individual sectors which are moving up higher. So I think it's a temporary churn, but nothing major in terms of reversals which you're seeing in the patterns for individual sectors.
Not a complete reversal, but what is reversing in the trading session today is, of course, India Mart down 6%. There's also Fine Organics, which is reacting to its earnings. And then Birla Soft, which was a bit of a soft quarter, especially on the margin front. So that stock too has taken a bit of a knock, down about 5%. RITES is interesting because the company has actually gone ahead and announced a bonus issue in the ratio 1:1. But that's not clearly enough to better the mood of the market, because for now as well, that stock continues to be in the red. And Titagar, of course, was a weak set of numbers. So it's getting a bit punished by the street, and ditto can be said for Indus Towers as well. But I wanted to put the spotlight on some of the earnings that really came through earlier today for M&M. While the top line was largely in line with expectation, there was a bit of a miss, or there was a bit of a beat coming in as far as the EBITDA margin is concerned, and that's why M&M is in focus. Let's pull up that chart and see how the stock is reacting. In fact, we did get a chance to interact with the management at the press conference as well. Maybe you should pull up a slide as to what they're saying about the way forward, because remember the time when the stock had taken a cut because the company had taken a price cut or discounting as well. Now they have said that they wouldn't shy away from taking another price cut if needed. So that's the verdict coming in. Let's listen into a slice of conversation as to what the management had to say in the press conference earlier. Okay, we'll try and get that bite, but in the meantime, Shrikant Chauhan is also joining us. Shrikant, what's the view on auto stocks, Tata Motors, as well as M&M?
Yeah, good afternoon, everyone. I think, see, all these auto companies, they are really doing well. Most of these stocks are crossing their important levels. Most of these stocks are very close to their all-time highs. So one thing is very clear that we are going to see furthermore activity in almost all the companies. Like Ashok Leyland is really doing well. Mahindra and Mahindra is very close to its previous highest level of 3020, and above that we can see breakout sort of formation, and even Hero Motors. So I am of the view that yes, if traders really looking for any sector, then I think this particular sector should be on the watch list.
Okay, that's the take coming in on M&M. In the meantime, of course, while the margins have been a beat largely driven by better performance for their farm and the tractor segment, that is something that the street has liked. But don't go by the way the stock price has moved, because it was already positioned at a life high ahead of the numbers, or was doing very well in any case. But here's Rajesh Jejurikar and Anisha talking about all the chatter around the price cuts and, of course, segmentally what's delivered for them in the quarter gone by.
So when commodity prices were higher, when there were a higher price and capacity constraints, we had taken up prices at that point in time to reflect the margins. As commodity prices came down, as the chip supply became more open, as the prices for chips came down as well, we started to see better margins, and that's the benefit we're passing on to customers. Also, with capacity going up to 10,000, we can be a lot more aggressive in the market as well. So it's a combination of all of those things. Right?
So if we feel that we need to do it somewhere else, where we feel that there's an opportunity that we see for growth, we would do that. I don't think we plan to do that indiscreetly, and I don't think we plan to do that across a whole portfolio of products. But it's not like we will never do this again. In any segment, we will try to do the right trade-off between a sweet spot customer price, the right margin, and the ability to grow volume. So, it's our role to juggle these three variables. We continue to remain optimistic about our EV plans. As we've shared earlier, we believe the country needs a strong electrification drive. We believe we've created products which will excite the market, and we will be on track for launching our new electric vehicles in 2025.
Okay, that's the take coming in from the M&M management. In the meantime, look at Godrej Properties too. They've given out their guidance. They've said that the booking value guidance worth about 32% was already met in the first quarter, and that they are on track to meet or exceed their guidance. That's Godrej Properties holding up 1.25% as we speak right now. Kunal, out of the entire realty pack, whether you see some consolidation coming in now for the entire sector, and if not, where is it that you would pick up within the realty pack?
So I think Oberoi Realty is the fresh breakout candidate. The stock in the last few days has seen some heightened pace of momentum activity for itself. So I think the stock breaking past over the 1750-55 barrier, which was the previous swing resistance for the stock. Recently, the stock has also bounced back from its 50-day moving average. So a lot of positives for Oberoi Realty in the very short-term timescale chart, and would probably expect the stock to come back to levels of 1950, 2000 as well over the next 1 to 3 months. But more interestingly, I think what I like about the real estate sector is the momentum coming back for even the larger cap names, or the ones which were going through the last 1.5 or 2 months of consolidation. The likes of DLF, for example, that's looking attractive. Godrej Properties has managed to bounce back again from its 50-day moving average. So larger cap names also doing pretty well, and these stocks have reaffirmed their leadership quality on the short-term charts, and that would probably give more confidence in the sector. So overall bullish on the real estate stocks, and from a fresh breakout play, Oberoi Realty is something which I would be looking out for.
Okay, so that's a pick within the real estate pack, but there's just some fresh commentary coming in from both the con calls of Ambuja Cement as well as Indus Tower. So for Ambuja Cement, they are saying no such plans to consolidate all cement entities into one as of now. So they're going to keep the 3 entities separate, ACC, Ambuja as well as Penna, which they had taken over. And they are saying market share of the top 5 companies in cement industry is now at 60%, and they expect the consolidation in the cement industry to continue at least going forward. So that's the view coming in from the management of Ambuja Cement for now. Of course, the commentary from the Indus Tower con con call which is underway right now is also there at the bottom of the screen. They are talking about how the overall cash flow generation is expected to improve from here on, and they also say that buyback is a tax efficient way to distribute cash currently being the operative word here, because of course from 1st October that entire buyback tax changes will also come into effect. So maybe just ahead of that we might be staring at a lot more buybacks. In fact, Anand Tandon is back with us. Anand, what's the view on the cement industry? Do you think the bulk of the consolidation is behind and there should be now some growth, or do you think the sector would continue to be in the consolidation phase at least for the medium term now?
Whatever the companies have reported in terms of capacity growth, I don't see how they can be consolidating. The demand will continue to remain behind the supply. Most companies are adding a lot of supply even now. And while there have been talk about limestone scarcity and the need for buying up capacity of limestone, I've been hearing that for the last 20 years. So I don't think that is going to be a constraint anytime soon. Consolidation, no doubt, is progressing apace, and therefore, to some extent, pricing may be a little more controllable as each segment of the market finds 2 or 3 large players as the dominant players. But for the near term, at least, I don't see that happening. And I think you'll continue to find most of the companies operating at 70% or thereabouts capacity, which is not a very economically viable level to be operating at.
The other stock which has been in focus has been Granules. That, of course, is one of the star performers today. They've seen a margin improvement on a year-on-year basis. The EPS as well has seen quite a significant uptick. So that's something that definitely that the street is liking. You are seeing an uptick of nearly over 7% now on Granules. Anand, as individual and case-by-case story, Pharma may be, but any view that you may have on the sector or any particular company that looks interesting?
Well, there are clearly 2 themes playing out, both of which are doing reasonably well. One is the domestic market, where, if you've got a good distribution, there is money to be made because the volume growth has again come back to about early teens, from maybe almost single digits. And therefore, you are seeing a little bit of consolidation happening in the domestic market as well. Globally, consolidation more or less is over, and now the API prices have begun to move up. And while that I don't think is going to be a very sustained trend, because after the US election, you are likely to see a lot of pressure coming through on US government purchases and medicines, which means that there will be some pressure in terms of trying to keep the prices under control. But for the near term, at least for the next 6 months, the likelihood is that you'll get a little better margins than you have in the past. And we are already seeing that in the current quarter estimates. So given the fact that it was a sector which had not done as much as many of the others, it is only rational that some of the companies which have got a good API portfolio, which they can supply overseas, are right now in focus.
Right, okay, Anand, stay with us. We're going to take a very quick break, come right back. We'll continue to track markets the last half an hour of trade.
Welcome back. Well, what's space which is on fire right now is the entire power stock. So Torrent Power is up 16%. NTPC, which had a very good run yesterday, continues to hold ground. There are a lot of these names, the likes of Tata Power, etc., which are sitting very close to the life high levels as well. What's the view on some of these names, Anand? They have run up quite a bit, all of these power companies. But do you anticipate further headroom for them to grow from here on as well?
Market seems to be super excited about the fact that there is a demand for power, as if there was ever a situation where there was not a demand for power. The problem always was and continues to remain that demand requires ability to pay. And the classic definition of demand is willingness and ability to pay. So is there a need for power? Absolutely. Will the capacity continue to grow? Yes, they will continue to grow. Is it going to be something that will make you humongous amount of money? Not really. It's a utility, for heaven's sake. Most of the companies which are in the government sector are regulated entities with a regulated kind of return, and they will be supplying to public sector units, especially the state electricity boards, who are still in deep trouble. Nothing has changed there. So, and as far as the renewable situation is concerned, you are going to be getting more and more bids, which will have to be bid at lower and lower prices by and large, especially if the price of the hardware comes down. And therefore, again, you are looking at a 15, 17-year kind of cash flow before you are beginning to make money. So you have to be careful how you buy these utilities. These are not growth stocks in the traditional sense of the word. Therefore, you have to be buying them at utility valuations. Right now, most of the public sector companies are not trading at utility valuations. They are trading as if they've just discovered gold.
Right. Okay. Anand, great to have you on the show. Thanks as always for taking the time out and joining in. We'll have Dipan Mehta to join in just minutes from now. But here's Ambuja Cements that delivered a lackluster quarterly number. The other income, though, more than doubled, while it was a miss on margins as well as revenue and EBITDA too. Here's the CEO, Ajay Kapoor's take on the financial performance.
I'm happy to share with you the performance of Ambuja Cements for Q1 FY25. Ambuja Cements has achieved sustainable financial results supported by cost leadership, improved efficiencies, and growth. For the year-on-year, the consolidated performance revenue has grown at 8,311 crores. Operating cost went down by 3% at rupees 4,437 per ton, a reduction of 138 per ton. This is mainly on account of 13% decrease in energy cost driven by our efficient fuel management. We achieved a 17% reduction in the kiln fuel, which now is at rupees 1.73 from the previous quarter of 2.08 per 1000 kilocalories. With these improvements in cost, our EBITDA is rupees 1,280 crores. The EBITDA per ton stands at rupees 807 and margin at 15.4%, and profit after tax stands at 790 crores. Our consolidated cash and cash equivalents at the end of 30th June 24 remain at a very healthy 18,299 crores. On a standalone basis, the net revenues are at rupees 4,516 crores with a 2.5% volume increment at rupees 9.3 million tons. Our EBITDA is at rupees 646 crores, EBITDA per ton at 691 and margin at 14.3%. The PAT is 571 crores. Coming to strategic investments and expansions, Adani's total cement capacity reached 89 million tons, which includes Penna Cement's 10 million tons, which is under acquisition. The acquisition of Sanghi Industries, Asian Concretes and Cements Private Limited, Tuticorin Grinding Unit, in addition to economies of scale, greater efficiency, better use of resources, and long-term environmental sustainability, the acquired assets with captive jetties as well as coast-based bulk cement terminals have further strengthened the marine logistics. Asset of Penna would bring cost optimization through cement and clinker synergy between existing footprints and expansion in coastal footprint with string of bulk cement terminals and grinding units on the east and west coast of India. This coastal network will allow us to serve markets efficiently and suitably. Recent budgetary announcements of the capital city, Amravati, makes these markets even more attractive for us. Today, Ambuja and ACC are one of the largest cement entities in product leadership, sustainability, innovation, and green offerings. These brands have been recognized for their climate change mitigation commitments with a leadership score of A- by CDP. We have also launched the industry-first digital BRSR, enabling quick overview and ease of information on companies' ESG performance in an interactive and interesting manner. With the addition of 8 million tons of clinker capacity at Bhatapara in Chhattisgarh and Maratha in Maharashtra, we are well on our way to further expand in our brownfield operations. As these capacities will come online, we will also raise our ESG standards to include 42 megawatts of waste heat and 30% AFR usage for the new plants.
Okay, that's the word coming in from Ambuja Cement, which has been a miss on all operational counts. Let me welcome on board Dipan Mehta as well and find out what he's making of the market in various sectors right now. Dipan, hi, afternoon. Just taking a leaf from Ambuja and the stake buy from Ultratech of India Cements. Just wanted to understand whether you think there's more consolidation to go in the industry, or this is pretty much it, wherein the pecking order of the cement players is pretty much a given now.
Good afternoon and thank you for having me on your show. See, I think consolidation can always take place because there are so many cement companies. More than 50, 60 cement companies are there. So consolidation is a process. But yes, I think the large ones, the low-hanging fruit is all over and done with. And as we have seen with every acquisition and consolidation within the cement space, it gets more and more expensive. Like a lot of analysts feel that Ultratech acquisition of India Cement was more expensive. It's just that existing cement owners become more picky and the assets get more scarce. So the larger company like Ultratech, ACC, Ambuja who want to grow at any cost, they'll have to pay higher and higher premium. So it's a process. I don't think it's over and done with. But what is very clear from the cement numbers so far is that by and large, I think they are in a very slow season per se. And at the same time, the volumes are high, but realizations are low, which means that the competitive intensity is just increased. And yet the cement companies want to keep on expanding capacity. So I don't think that this situation is going to ease out in the near future.
Point taken. In fact, this morning itself, there was that news that JSW is looking at cementing its business amidst the consolidation wave. And there was that chatter that perhaps Orient Cement could be one of those assets that JSW Group might be looking at. So definitely watching out for more consolidation in the entire cement pack. But Dipan, just wanted your take regarding, some of these, consultation papers that we saw last evening, of course, talking about the speculative trading and the methods to curb that. What do you make of that?
Yeah, I think on all my WhatsApp group, that's all the chatter is all about, the consultation paper. And I'm sure brokers will be putting up their response to the consultation paper. But yes, it's going to cause a lot of stress in the options market. But it's going to impact is going to be restricted to a few broking companies. And on the whole, I don't think it's detrimental to a fundamental analyst like us or a long-term investor who comes into the market through mutual funds, PMS, or doing research-based investing. So it's a bit of a tricky issue within the capital market industry. It was a situation which had to be curbed, and of course, SEBI has suggested some steps. Let's see whether they actually work out because the speculation is such that once it gets going, any number of barricades you put doesn't really stop it so long as it's profitable. And unless it doesn't get profitable, it will not stop. So let's see how it plays out. But for the time being, I think some of the pure play brokerages, the discount brokers, are going to feel the heat of lower volumes and lower brokerage income.
Pricing is some of these companies are actually holding comfortably in the green today. Like one would have assumed that BSE might be under pressure, might not take it well. That stock was up 6%. KFin Technologies, which of course does not get directly impacted, but they do have the RTA business, which might get impacted through the ripple effects. That stock is in focus. You also have Angel When that continues to hold quite okay. 361 is actually in the green right now, 3% higher. So come hail or storm, clearly some of these stocks just continue to inch higher for now. The other space which is doing quite well is life insurance, and then comes some of your pharma names. So apart from Ajanta and granules that we're talking about, there's a Suven Pharma which is comfortably up, there's a Gland Pharma which is up 4%, and a lot of other names as well. Anything specifically that you're picking up in the pharma space right now, Dipan?
Yeah, I saw the numbers across the board. Pharma has come out with exceptionally good numbers, and 2, 3 numbers which really were quite decent. One is a large cap company. I thought Cipla came out with a good set of numbers. Dr. Reddy was okay. Management commentary is extremely positive, and they made an interesting acquisition. But amongst the mid cap pharma, the stunner was Strides Pharma, and they came with a superb set of numbers. It's been a great value creator in the past. The CEO Arun Kumar has been known to identify the right trends in the pharma industry and create a lot of wealth and value for his shareholders in the past. So that's a company worth watching. It's not a recommendation, but I think it should be on the watch list of many investors. And the kind of guidances which they have given and coming from a management which has a proven track record, I think this company could go places. And clearly, I think they've got the strategy right after many, many years of trying to figure out what exactly to do after they sold off most of the businesses. Valuation wise, it is reasonable if you extrapolate what earnings potential is there in the company. And I think investors should definitely get overweight on pharma. I thought even Mankind's deal for the Serum Institute, the BSV, Bharat Serum, That also was very interesting. And if you're a really long-term player, I think Mankind Pharma also can deliver exceptionally good returns.
Okay, that's quite interesting. In fact, let's stay with some of those pharma movers. Shrikant, want to get you in on the charts as well, given that granules is the big mover today. And then, of course, we've seen the entire sector as well move. Anything that you're liking trade-worthy within pharma?
Yeah, I think all these stocks are really showing very strong momentum, and most of these stocks are rallying. Then thereafter, we are seeing some consolidation, and again they are rallying to the and surpassing their previous highs. So one thing is very clear that there is a specific buying interest in the sector, and it's an interest for a longer time, and it's not like something which is going to end with the short-term tactical moves. But in that space, we like Natco Pharma as well as we like Biocon. Both these stocks are very close to their important support levels. So currently they are attractive in terms of risk reward ratio. Biocon is at 362, 363. So it's a buy at current levels with a stop loss close to 354. We are expecting stock to move towards 380, 390 next few days or few weeks. It will take some time, but it's a buy. We also like Natco, which is around some 1350, 1360 levels. And there also we are projecting 1450, 1500 sort of levels. Around this level, it's a buy with a stop loss close to 1330. So both the stocks are very close to their support levels. And I think entire pharma is something which is going to do well for in next few weeks.
One space which you are positive on right now, but auto is going to be in focus. Of course, earnings are coming in thick and fast, and we've got the number of M&M already. Maruti is also something which is on our radar, as well as Tata Motors. But what are the expectations as far as the month of July is concerned with respect to auto sales? That's the data we'll get tomorrow. Let me take it across to Shrishti to find out the expectations.
Well, for July auto sales estimates, we are estimating that the two-wheeler segment could be the outperformer in the month gone by. Apart from that, the other segments are also expected to post a healthy set. Why we are expecting that the two-wheeler could have the biggest push amongst the other segment is because of the rural as well as urban demand is expected to support, and for the upcoming marriage season, some of the pre-buying has also started. If we talk about the numbers, then firstly, for M&M Automotive Division, we are expecting a jump of just 3% on a month-on-month basis, while for even Tata Motors passenger vehicle as well as Maruti Suzuki, we are expecting a single-digit growth. So that's about the passenger vehicle segment. Not much is expected on this particular segment, but definitely the momentum should continue as per what we are expecting at least. If we talk about the two-wheeler segment, then this could actually show a double-digit growth for select companies when we compare the number on a YY basis. Bajaj Auto and Hero MotoCorp are some of the companies where we are expecting 11 to 13% growth on a YY basis, while for TVS as well as Eicher Motors Royal Enfield, we are expecting a single-digit growth, but the growth should be is expected to be seen on the positive side. When it comes to the commercial vehicle segment, then do watch out for Eicher Motors VECV, because on a low base, 17% YY growth is what we are expecting, while for Tata Motors CV as well as Ashok Leyland, the numbers could be just flattish, but the good point is that the growth could be supported by the replacement segment. And lastly, if we talk about the tractor division, definitely a segment which has a lot of cycles involved, but for this time we are expecting 26,050 units for M&M tractor division, as well as for Escorts 5,650 units is what we are expecting, and a normal monsoon is expected to support the volume. So all in all, a good set of numbers expected from July auto sales estimate. Back to you.
Right, Srishti, we'll leave it at that. In fact, let's get in the dealing room chatter as well. Sharad is here to tell us about what the stocks are being talked about.
Well, yes, in focus is Ajanta Pharma, and what we are gathering from dealers is there is a buying coming in from an FI desk. Now, of course, the results have also been very strong, and after that, the FPI buying has been coming in. That's what we are gathering from the dealers. Interestingly, the volumes have also picked up almost 4 times its 20-day average, and FPIs are holding currently 8.3% stake in the company. Also, the stock, if you look at it, is up almost 54% in the last 1 year. Now, in the recent con call, the company has given 2 upgrades in the guidances. The first one being the business mix is turning favorable for FY25. So they have actually increased their margin guidance by 100 basis points to 29%. And also there is a relief coming in, is the company has stated that there would be a tax rate guidance that has actually come down. Earlier it was 26 to 27%. now it is 24%. So both factors actually auguring well for the company, and the company has maintained its emerging markets branded market guidance between mid-teens, and for the US business they are guiding a double-digit growth for FY26.
Okay, so that's about Ajanta Pharma. The stock definitely buzzing in the trading session. Zomato is one stock which will come out with earnings. Let me take it across to Vinny to get a sense as to what the expectations are, because the expectations are rife, because the founder has just put a update on X or Twitter, and they're talking about something called District, which is coming up. Definitely tantalizes the curiosity, but we'll get to know that only tomorrow. Let's take it across to Vinny to at least get a sense as to what the expectations are from the numbers this time around, Vinny.
Yes, so from Zomato, we are expecting a revenue growth coming in of around 12% in terms of revenue, profit, a 34% growth, and EBITDA margin. This is the EBITDA margin we're talking about, 4.6% versus 2.4%. EBITDA, this is not the adjusted EBITDA. The calculated EBITDA, 183 crores versus 86 crores, on uptick, sharp uptick in terms of the EBITDA also is what we're expecting. Adjusted EBITDA, somewhere around 295 to 300 crores is the estimate that is coming in there. So let's watch out for that number. Strong quarter is expected in terms of the food business, food delivery side. Expected to see a delivery GOV of around 7% on a quarter-on-quarter basis, while in terms of the Blinkit GOV also expecting around an 18% growth there in terms of the GOV, that's the gross order value. What is important to watch out for is in terms of market share trends in food delivery business, what is the competition there, the near-term outlook or trajectory that they have for FY25 in terms of EBITDA, net dark store additions, what's that for Blinkit, how is Blinkit's performance. Blinkit is expected to see a strong performance even this time in terms of overall growth. So will be interesting to see furthermore in terms of where the trajectory goes forward. But yes, a decent number that we're expecting from Zomato.
Okay, so that's the latest as far as Zomato is concerned. Of course, remember earlier there have been reports that Zomato and Paytm might be in talks for the movie and the events business. Not really sure if that's an announcement we should look forward to, but definitely something around District is coming. That's the word coming in from Dipinder Goyal, the founder at the company. Dipan, do you have a view on Zomato? Because the stock price has moved quite a bit, and even Paytm for that matter, which looked in the value zone some time ago, has now inched comfortably higher. What's the view on Zomato and Paytm now?
For Zomato, disclosure, we and our clients are invested, and I think that particular investment has worked out extremely well for a lot of shareholders. And I think company is going from strength to strength. The food delivery business should get solid into profit pretty much soon. And Blinkit, which is the quick commerce division, is getting more and more, I would say, valuation and more interest from investors, because that's one hot spot or high growth spot within the retail industry, and with very high entry barriers as well. And Zomato certainly has created scale and has created a distribution network and an entire ecosystem whereby they're able to grow the quick commerce division of Blinkit, and that eventually is going to add significantly more value going ahead as well. So very positive on Zomato, but I must say that there is one particular threat, that of ONDC. And if a lot of customers start to order food through ONDC, then certainly Zomato's business model can come under threat as far as the food delivery business is concerned. So we need to keep an eye on how ONDC is progressing, and then see what effect it has on Zomato. But look, food delivery and quick commerce, they are just really absolutely sunrise industries. And 5-10 years from now, these can be multi-billion-dollar kind of businesses. So Zomato from these levels also, if it plays out well, can deliver exceptional returns going ahead.
Okay, that's that in Zomato. Kunal already at 230. Now what next?
Yeah, but I think the pace is slowing down for the stock in terms of charts. So maybe what we could be looking out for is very gradual upside for Zomato. Now it's very difficult to try and place target for stocks which run up into new high territories, because then what we generally rely on is the stocks studying the momentum for itself and then trying to respect the short-term moving averages or the previous swing supports. I think in this case for Zomato, the near-term support for the stock is at 217 to 18 mark. So I think for traders who are holding on to the long positions, it's best to try and hold on to the stock, keep the trailing stop losses higher, and as now the stock continues to gain trend, if the momentum accelerates, that's where we typically expect the stock over the short term to try and perform very well. So far it's a decent chart. 217 to 18 could be a trailing stop loss for the stock.
Okay, just watching out for the numbers coming in from Maruti, and it looks like it's a beat versus expectation, both in terms of the profitability as well as bottom line. The bottom line on a standalone basis has come in at 3,650 crores. That compares with our expectation of 3,467, and even on the revenue front, I'm looking at a number of 35,531, and that compares with our number, which was around 34,770. So seems like there's a top line beat coming in for Maruti, and that's the reason the stock has seen a bit of a jump up. Of course, this is the trend that we have been seeing across the space as well, that there has been more or less good numbers come by from the auto sector, and given the fact this is a top line driven beat because the revenue has come in better than expectation, and then of course the profitability has also been good, overall the expectation is perhaps that the company has managed to deliver a decent amount of number even on the EBITDA front, because the EBITDA has come in at 4,500. We were working with a number of around 4,160. So that beat in the top line is getting reflected even on the margin front, because the margins have come in closer to 12.5, 12.7%, and that compares with the expectation of 12%. So it's a all-round beat coming in for Maruti, and that's the reason the stock is trending higher by 1.6%. We'll try and get an analyst to decode the internals as well. But in the meantime, Dipan, do you have a view on Maruti specifically? 2% higher now.
Yeah, I think great set of numbers, and clearly it's kind of blue sky scenario for Maruti with decent volume growth now that all the supply related issues are sorted, and they've really covered up a lot of the order booking which they had earlier. Raw material prices have been pretty much stable, but I think the auto industry is getting into a soft patch, and one needs to be a bit careful and not be overweight auto. Although we ourselves are shareholders of Maruti and it's been a great investment, but I think next few quarters could be tough for the auto industry, and you could expect slowdown in the volumes as we have seen for the past 2-3 months. Eventually that will get reflected in the financials as well. So right now I think we are seeing a good trading rally in Maruti, but I would be a bit cautious and not chase this particular rally.
Right, okay, that's the take coming in on Maruti. An immediate spike up of 2.5% is what you're seeing on the stock. Interesting the way things are moving within the entire auto pack. But that said, Oberoi Realty, DLF, Godrej Properties, all of these stocks are sitting at their pretty much high point of the day. We're closing in with gains for an HDFC Life, for a JSW Steel, for Asian Paints, Granules, Staracom, Trent are stocks that we've talked about in any case. But Dipan, we'll let you go on that note. In fact, Kunal as well as Srikanth as well. Let me take it across to Abhishek Gaushinde and analyze Maruti's numbers better. Abhishek, hi, afternoon. And I guess looking at the numbers, it seems like a beat, at least as per the ET Now estimates. What are you? What's your first take?
Yeah, broadly, the numbers are appearing higher than our estimates. We were expecting a 11.2% kind of a margin, which is appearing 12.7%. So broadly, what we can assume that given that in this month the company has cut down the prices for this automotive gear division and has increased discounts on the promotional offers, along with launched limited editions for this Dream Series product. But despite that, the company has reported decent top line. So what I can guess here is that the share of CNG vehicles would be higher in this quarter compared to the previous quarter, and that has supported the ASPs and the top line performance, given that in the previous quarter company was facing some production constraints in the CNG segment. Second is that this UV segment, UV mix has been consistently maintained at 31%, so that is also supporting the ASPs. And third is that the raw material price hikes will be passed on to the dealers at a lag, so that reimbursement saving may also have supported this EBITDA margin in this quarter. Considering that in the previous quarter there was a 60 pips kind of one-off, but despite that the reported EBITDA margin or prima facie is appearing a beat in the numbers.
Quickly, Abhishek, do you anticipate a big change in the estimates, because the stock is trading at life high levels? Do you expect further uptick in the target prices that the analysts are setting?
See, broadly, the larger part of the earning potentials have already been factored in the numbers. So, a stock is also trading at a 23, 24 times of its FY26 estimate. So, significant upside in the upward revision in the earning estimates quite difficult, given that the industry volume growth for this year is still low single digit. One, two, the EBITDA margin cycle has been consistent, but side by side the inventory has been increasing in the market. So market would like a significant change in the outlook of the management. If there would be a significant change in the outlook for the PV segment, then it may happen. Otherwise, the broadly the earning estimates or the valuation parameters will remain as it is.
We'll leave it at that. In fact, we're going to wind it up right here as well on this edition of Closing Trade. It's a goodbye from Manisha and me.